So, hi everyone, I'm Liz Kukka, a principal investor at Digital Finance Group. Just a quick background and overview. So, at DFG, I work on the hedge fund side, and then in those dashes, you'll see other kind of lines of business that I work with for the company. That's our custody business that'll launch later this year in South Dakota, as well as operations for Matrix Exchange, which will launch this week, actually, and I'll tell you more in a bit. And then on the side, I advise a handful of crypto blockchain startups. And before the world of crypto and blockchain for myself, as head of programs and operations for insurance at Plug and Play Tech Center in Sunnyvale. I was also a school teacher for about 7 years in San Francisco, working with at-risk youth. And then, as I just mentioned, got my MBA from CCA. It's the only triple bottom line school that I know of, so people, profit, and planet. And then got my degree in environmental science from SFSU. And I'm from San Jose originally. Was in San Francisco for almost 18 years, and now I'm in Southern California. All right, so what we're going to cover: a quick intro, dive into Bitcoin, dive into Ethereum, talk about Web 3.0, which is disruption and adoption, talk a little bit about crypto regulation. And then my big goal for the presentation is to share with you about careers in blockchain and crypto. Most people I meet, they do it as like a side thing, which is wonderful. It's like a hobby or it's a side project or whatever it may be. But I really like to encourage people to think about what a job might look like in the industry because all of my friends' companies are hiring. We all need great people to join us. So please don't overlook the opportunity. All right. So Digital Finance Group. I'll give you a quick overview. You don't have to read everything on the slide. We've been in finance since the 90s. We got into venture investing by the end of the 90s, early 2000s, and then transitioned 100% of the Digital Finance Group business, our investments, into crypto and blockchain in 2014. So we've been around for 7 years. We've done pretty well. We've launched two hedge funds, we've done a ton of venture investments. And then, as I just mentioned, we'll launch Matrix Exchange this week in Abu Dhabi and a custody business in South Dakota, probably like November time period this year. But we've been around, and I think have a pretty good track record. Here's a quick overview and outdated slide of some of our venture investments. They include Brave and Ripio and LedgerX. Brave is probably the one that most folks know, as well as US Dollar Coin, which was developed by the Circle and Center team. Some of our newer investments include Polkadot, which we made an equity investment into, as well as a contribution to the broader Polkadot ecosystem, or kind of a financial commitment to continue helping grow that ecosystem. We're spread across the globe. Again, Matrix launches this week, which none of us can participate in unless you have citizenship in another country or access to a bank account somewhere else. But otherwise, you can't participate. And now diving into the fun stuff. All right. So if you don't already know a ton about Bitcoin, a really quick overview is that it was launched in 2008 as a response to the financial crisis of the time. And there was a financial crisis probably every 8 years before that. And, a group of people got together and said, well, why do we continue to be, victims of circumstance where we have to play by these rules where people are either, printing money or having insider rules or insider trading that the rest of us can't participate in? Why can't we just have a peer-to-peer system? It's not anti-government. It's not about anarchy in any way, shape, or form. It's really about why can't people have sovereignty over their own money and just kind of deal with each other person to person if that's what they want to do. And how can we make this distributed and decentralized? And so it's kind of an overview, at least my perspective, on what it's about. Here's the Bitcoin white paper. If you haven't read it already, it's only like 8 pages long, maybe 13 pages with references. Super short read, highly recommend it. It's not that technical. And here's the link, easy to find. And in summary, which is pretty much what I just said, the premise is about peer to peer. It's about decentralization or people empowering a system together. So if Nike were to shut down tomorrow, but there were a distributed system of owners and operators, it really wouldn't shut down. It could just pop up somewhere else. And that's really the notion: is how can we collectively keep things that we love or believe in going? It's also cryptographically secure, and it also helps with self-autonomy. So if you don't want to read the white paper, here are the four pointer overview. To go back in time, and I probably don't need to convince anybody of this on the line. In January 2009, Bitcoin was essentially a dollar, or actually far less than a dollar. And as of this morning, it was at 53,000. Right, it hit 60 probably about a month ago, but it's pretty much gone up over time. Even though it's had some crashes here and there, and it's currently placed based on uh, transaction volume or coin market cap. It's higher than Google and just below Amazon at this point. It's also on the balance sheet of MicroStrategy, Tesla, Square, and Fidelity, who's about to launch an ETF. And let's not forget BlackRock, who's adding brokerage access for this. And the whole point here, and again, I probably don't need to convince anybody on the line, is just the confidence that I see in this asset class. I don't see it going anywhere whatsoever based on who's currently participating. Quick overview of some major institutions that you may know of and how they're participating in some way. And on to Ethereum. Okay, so we went over Bitcoin, started in 2008. Ethereum technically was written in 2013 and launched in 2015 by, I'm sure you all know, by Vitalik. The argument was, how can we take Bitcoin, which is this wonderful thing, and make it a little bit more effective or impactful? Ethereum white paper, again, if you haven't read it, I highly recommend it if this is a space that you intend to spend more time in. And so how can smart contracts really bring us forward and bring new technology and services kind of to the masses? I would say still today there's not that much development on Bitcoin. There's a small amount, but Ethereum definitely has a different value proposition. And you see a lot built on Ethereum today, as I just mentioned. I'm going to show just a few examples. This is Ethereum name service. So today, if I were to send you, let's say, to Ethereum, you would see that top red line with this long string of like hash. If you use an Ethereum name service, you can claim a name. So I could claim liztk.eth, and that's now my wallet address instead of having to send somebody this unapproachable long hash. So if I was going to send this to my sister, she'd probably think, what in the heck is this long string of numbers and letters? If she had her own wallet address with her name, it's far more approachable. And so I wanted to share this because this is one step forward in blockchain adoption that I think is important, which is the user experience and how the user is able to interact with different solutions that are on the market, which today are fairly, again, not very approachable. Brave is another one. If you don't all use Brave browser, I highly recommend it. It's built on Chromium, so Google Chrome, but it's faster somehow. And essentially, if you are willing to click on ads that they share with you, you get paid in BAT. So I think within a year and a half, I've made like $130. I've paid zero other than looking at an ad, and I probably look at an ad once a month. I really don't click on ads. So it's not bad. A third one is OpenSea, and I'll share these slides after in case anyone's like taking down some names here and there. OpenSea NFT marketplace, pretty self-explanatory. Audius, this is for newer musicians and ways to help them kind of monetize their music instead of having multiple middle persons in between taking a cut of what they're doing. This is also a token that's out and about in the world today that you can research and find. And so, where I'm kind of going with all this, started with Bitcoin, then Ethereum, and now I want to talk a bit about Web3. So, if you think about the taxi cab, it's kind of the analog world, which was disrupted by Uber and Lyft, who brought a digital kind of addition to what the taxi was doing. I know in San Francisco in, I don't know, 2005, 2010, it was such a pain to hail a cab. I'd be standing on Van Essen Market trying to hail a cab. and it's like raining and it's 20 minutes later and a cab finally passes by. It's just such a hassle. So I mean, it makes complete sense that Uber and Lyft were able to disrupt, the medallion system and the taxi system. What I see happening with Web3 is a displacement of Uber and Lyft and Facebook and Google, or possibly living in parallel, based on the demand of people who want democratization of ownership, who want transparency and where profits are going, who want interoperability where you can take, your tokens from your Facebook game to another platform, and so on and so forth. Something else that I think is really interesting about Web3, which we didn't see with Uber and Lyft. With Uber and Lyft, they competed with the taxi cab for customers. With Web3, there's going to be a competition for customers, but you also have investors who are now putting their money behind crypto and blockchain companies, and therefore not putting them in Amazon, in Google, in Spotify, which I love. But it's a bit more painful and a bit more real when you're not only competing for customers, but now you're also competing for investors. I wanted to share this slide about the US Department of Defense and the development of the internet, because the internet first kind of started getting researched in 1983, and it took, I don't know, almost 15, 20 years for it to have mass adoption, to have things like MySpace, which, is a predecessor of Facebook, or Friendster, which is a predecessor of MySpace. So it took a long time. And so I say this because people get really impatient with blockchain and crypto. Like, when's it going to happen? When's there going to be mass adoption? Why is it taking so long? And it just takes time. It's going to be really clunky for a while. And so I see blockchain and crypto as kind of the replacement, or possibly in parallel, of these comparisons that I'm sharing here. Traditional grocery store, Instacart, Web3, a world where a new company offers 10% of all of its tokens to its user base in the form of rewards, or as I see it, as an alternative to equity. This is one of my favorites because when I was a kid, I actually ordered music from one of these little magazines here. So just for historical reference, I thought it would be fun. But again, analog world, digital world, Web3. And I should have put Audius on this slide, but I didn't do it. To show a little bit more about adoption, here's a quick overview of corporations who are currently participating in this space, as well as protocols and startups that they're working with. And according to Gartner, over 1,000 corporate blockchain projects are underway today, with the expectation that although many are experimental, many will go into production this year, with Forrester predicting at least 30%. So I'm very hopeful that this is a technology class that's going to stick around, and an asset class that's sticking around. A couple more examples. Honeywell is digitizing aircraft records. Coca-Cola is tagging some of their bottles to be able to track where the glass or plastic's landing to try to help from an environmental perspective. And then, of course, most of us have probably used Square for buying a coffee at Apple or wherever, right? Where you're making a payment. Square is pretty much everywhere, which now accepts crypto. Or Cash App, which I believe is also owned by Jack Dorsey, the founder of Square and Twitter. PayPal, of course, this is probably all old news, but I'm just going with like adoption. So this is all to say that I do believe that Web 2.0 is being disrupted, and that there is a lot of signaling demonstrating that people are supportive of crypto and blockchain. I want to take a little bit of time, since you're mostly, I believe, all finance students, is to go over how crypto is regulated today and what's legal and what's not. The whole point of regulation to me is always kind of interesting, because at one point in time, many things were not regulated, like options trading. And depending on the administration, things change. So current administration's somewhat supportive of crypto, next administration might not be. And so from my perspective, it's not about being good or bad. It's really just perspective, and supposedly to benefit the consumer and to make sure that the consumer is being protected. This is an example of this case with the Frank Dodd Act of 2010, which was rolled out during the Obama administration in response to the kind of the mortgage crisis and whole like Lehman Brothers disaster of 2008 that Trump then rolled back, I think in 2017. And then I think now Biden is like putting it back into effect, which is putting some regulation and restrictions around what banks can and can't do when it comes to trading and so on and so forth. And I think your professor can probably tell you even more about the Dodd-Frank Act than I can. But the point is that these things change all of the time. So how is crypto regulated? Well, it's regulated by everyone or every organization or every group that regulates finance in general. The SEC is pretty much the biggest one, followed by the CFTC. But then, of course, when it comes to the movement of money across borders and even in country, you're going to have FinCEN involved to make sure that there's no money laundering or financing of terrorism or racketeering, which is essentially like drugs and other things like that. The IRS, I hope if any of you are making gains on your crypto that you're reporting it, and then the Office of the Comptroller of the Currency. So we won't go into all of these. We'll go into the SEC a little bit. So one issue in crypto is, is it a security or is it not a security? And what's known as the Howey test is supposed to be the kind of litmus test for whether or not it is. And so today, Bitcoin and Ethereum are both known as commodities. They're not known as securities. Ripple, if you have heard, they've been charged with potentially being a security. A federal judge recently said, well, how is Ripple a security, but Bitcoin and Ethereum are not? So we'll see what happens with the Ripple case. And if you read through some of these, a lot of them sound like they could be crypto companies. Like the investment contract involves a common enterprise. Like, okay, well, it sounds like that could be a security. But then on the next slide, these are things that are not securities. If it can substitute for a currency, if it's being used pretty much immediately. So it's a really gray area of like what's a security and what's not today. And so this is, I think, the reason why a lot of people get kind of spooked about digital assets is because they want to make sure they're following the rules, and it's really still uncertain. To take this to a step further on how do you distinguish if something's a security or a commodity, or if you want to make sure that you're kind of like playing by the rules, so to speak. Filecoin, they did their token sale, I think it was like 3 years ago or so, on CoinList. And when they did their token sale on CoinList, it was a direct sale to investors. Okay, that's a security. And CoinList does a Dutch auction. You're not allowed to participate unless you're a citizen in, I don't know, Europe and Asia and wherever else, but Americans can't participate. So once the sale is done and Filecoin gets listed on Coinbase, it becomes a commodity. And it becomes a commodity because Coinbase is taking the risk. Coinbase has, I don't know, $1 billion worth of insurance or $100 million worth of insurance from Lloyd's of London. And it's now the secondary market, just like the regular stock exchange. So before, when it's a sale direct to investors, it's a security, and then it changes its label as soon as it hits Coinbase, and it's now a commodity. It's different when it's at, I don't know, Bit Baby. I just made that up. But like make up a name of exchange that's not regulated. I don't really know if it's considered a security or commodity. You would think it's a commodity because it's on an exchange, but because they don't have insurance and they're not regulated, I'm not sure. Like a big part of this has to do with risk. And Coinbase is essentially de-risking, anything that would happen to the consumer. That's a big aspect of it. But anyway, wanted to make that distinction here. So some of the regulated exchanges in the US, I'm sure you've heard of all of them. Kraken is in San Francisco. Coinbase is in San Francisco. I don't know where Binance USA is. I'm guessing New York. Gemini is in New York. CEX, I'm not sure. And eToro is in San Francisco, but they're actually from Israel originally. But all great exchanges to consider. All right, the most exciting part of this presentation, other than chatting with all of you, is who in the world is hiring in this space. So last year, LinkedIn did mention that blockchain is the number one skill for folks to have right now. Doesn't mean that you have to be an engineer. 10OS, this is one, and I have many for you. So feel free to take screenshots. Again, I'll send the presentation afterwards. For this one specifically, it's all engineers. Should have taken that one out. Let's skip. Lightning Labs. Lightning Labs is Bitcoin. It's pretty much the Bitcoin network. So business and finance operations seems pretty applicable to folks on the line. Celo, this is a fork of Ethereum. They issue ERC20 tokens just like Ethereum. The difference is that they focus on mobile development and kind of the impact or emerging market space. Tons of positions which they're hiring for, including if you want to go to Berlin, they're hiring for an economist and multiple accounting positions for their partner organizations, also in Berlin. Digital Currency Group, this is like the big gorilla of crypto. So financial planning and analyst, if you want to go out to Connecticut. If you go to the Digital Currency Group website, they have, I think, 8 pages of job listings from their partner and friend organizations. So most of these then come from there for these other orgs. So Coinbase, if you want to go to Dublin, looking at an analyst role. Account manager at Bitso. Business analyst, Abra is really similar to Celsius and BlockFi. It's a lending platform, a crypto lending platform. Silvergate Bank. Silvergate is kind of the premier crypto banking provider, both in the US and global. They pretty much just do commercial banking, but pretty much anyone who's kind of a who's who in crypto banks with Silvergate. It's a big deal. Southern California. Genesis, this is owned by Digital Currency Group. Multiple internship positions in New York. And who doesn't want to go to Singapore? And that wraps it up. Hold on, let me share my last slide with you.
Okay.
If you're not already using Celsius, you should definitely consider it. There's my unique link to use. But for instance, US dollar coin, you'll earn 10% annual, which is paid out weekly by holding your US dollar coin there. And they're also insured by Lloyd's.
I was curious, it's like I was reading like on Gemini, it said like they don't hold collateral, but I assume these other like Solius does or BlockFi seem like they do. Like I was
So,
confused with the list of the interests stuff. You know more about that?
yeah. So Celsius provides loans and they're at really good rates. I think they have maybe like $14 billion assets under management right now. So they're managing a lot of money. And I'm assuming what they're doing is they're like a bank. They're just loaning out money and I think they're giving 80% of their profits back to their users.
Oh, okay, I see. Mhm. Cool. Does anyone have a quick question for Liz before she has to leave at 1?
Yeah, I was gonna ask something. Thanks for presenting. That was great. Is your company hiring at all? For any
We are the custody businesses if you want to move to Sioux Falls, South Dakota.
Mm. Okay. No, think about that. Do
Sign us all up.
you guys have any internships over there, or do you do just more like intro positions, kind of?
We could. It just takes a matter of like getting the team together to make it happen. But I think we could definitely take interns at Matrix Exchange. But you're gonna have some pretty brutal hours because it's like Europe hours. So
Mhm.
early morning, really early morning.
What kind of positions would you think?
Yeah, probably mostly operational. I don't think many finance on that side. Hedge fund is in Shanghai, so probably not. We will probably do another hedge fund in Singapore, so absolutely, but not till later this year.
Okay, cool.
Keep in touch, Liam.
Yeah, I'll definitely keep in touch. Sounds good.
Okay.
So thank you for your presentation. And also like on Thursday, you mentioned like you're gonna send us a bunch of links and information. So
Yeah.
I wonder.
Thank you for the reminder. Let me send that to you. I have it ready. I've sent it to people before, so it's really simple. Liam, I'm sending that to you.
Okay, awesome.
Thank you.
Yep.
I guess one more last one.
Oh, okay, I guess last question. Do you have any kind of prediction for like the rate, that these kind of crypto or just like blockchain jobs are gonna grow? Like, maybe compared to just the other kinds of job growth in the US?
That's a good question. Almost every company I know is hiring, literally.
Yeah.
And I think the more that crypto companies are able to close funding rounds, like Andreessen Horowitz invested recently in Dapper Labs, I think almost, I don't know, $100 million or something. They're also an investor in Cello. So I think the more investment that pours in, the more teams are scaling. And it doesn't seem like there's like anyone slowing down by any means.
Mhm.
And I'm working with a few of the teams I'm advising, we'll all be hiring really soon, like at least middle of the year, later this year.
Mm,
So it doesn't seem like it. Um, yeah.
that's good.
And
Awesome.
yeah. And with Todd, would love to come back and chat anytime. Give me a very
Yeah.
specific topic if that would help, so I can prepare whatever you guys want to learn about.
Okay, cool. Thanks, Liz. I really
Okay.
appreciate it. All right.
Bye, you guys.
Yeah,
See ya.
thanks so much.
Awesome. Thank you.
Thank you.